ACCA, Developing Professional Accountants.
What we want to look at now is something called budgetary control, which in simple terms is the application of budgets, the plans that we've already prepared, for control purposes. What we now want to do is to use the budget for budgetary control purposes. What I mean by this is that we implement the budget, and each departmental manager will now be striving to achieve this budget. After a couple of weeks or a couple of months, we'll start receiving actual results. And what will we want to do with these results? Well, yes, what we want to do is to compare the results to the budget. Now, if we compare the actual to the budget, what happens if they agree, if they're exactly the same? Well, the answer is, if actual equals budget, we have achieved our aim. As such, we would take no action. We only take action when actual and budget disagree. This is called management by exception. And it means that we can ignore a lot of performance because it is the same as or near the same as the budget, and focus our attention where we must do, where there are differences. Now, when we analyse the differences, we have to understand why the differences have arisen. And as a result of that, well, let's look at the first instance. What happens if the actual result is better than the budget? In that circumstance, what action do we want to take? Well, you have to remember that the way control action works is this. Our whole aim is to bring actual and budget into line. Remember? We want them to be the same. So we can take two basic actions. We can either bring the actual into line with the budget, or the budget into line with the actual. If we've got better performance than the budget, we wouldn't want to drag actual performance down to the budget, so in that circumstance, what we would want to do is to revise the budget. In simple terms, reflect, maybe in forthcoming budgets, what we have learnt. Also, if the performance is uncontrollable, we can do nothing about it. Again, revising the budget is the way that we would bring actual and budget into line. What most of us focus on is the other circumstance. The other circumstance is where performance is poor, so actual is worse than the budget. Not only is performance poor, but it is controllable. We are able to do something about it. So, given that it is poor performance and it is controllable, in that situation we would take action to revise the actual. Maybe sack the manager or something of that nature. So what I'm trying to show you here is the step-by-step notion of maybe how budgetary control works. The next thing we have to be aware of is what sort of budget do we need for budgetary control? So what I have in front of us is a very simple question just to illustrate the issues involved. Grisevich has the following budgeted and actual information. So we have a budget of 1,000 units and a cost of £20,000. And then we've got an actual of 1,200 units and a cost of £22,500. So, my suggestion to you is, well, if we're asked, has the company done better or worse than expected? I'm going to suggest to you that it's done badly. We've got an adverse variance. We've spent more money than we expected to spend. Does that make sense to you? Well, okay, that's my suggestion. An alternative suggestion is this. We could say, well, hold on, the budgeted cost of actual output is going to be, if we divide the budget 1,000 units into the cost, what we end up with is £20 per unit. And so what we could do is we could take that £20 per unit, multiply by the actual units, 1,200, and say that we expect to spend 24,000. If I compare that to the actual of 22,500, we have a difference of 1,500, and what's that? That's favourable, that's good. Yeah? We've spent less than we expected. So I've given you two alternatives. Which do you prefer? Well, okay. Most people, most of the time, prefer the latter. But what I'm trying to get across to you here is this. What I've done in the latter is wrong. What I've done here is wrong, because in both cases I've made a fundamental assumption that is not supported by the question. To express the cost per unit, what assumption am I making about its cost behaviour? Well, I'm assuming that the costs are variable. Can I make that assumption? Well, the answer is probably not. In my original assumption, I took the cost in total terms. The assumption I'm making there is that the cost is a fixed cost. Can I make that assumption? The answer is no. So what I'm trying to show you is this. If we are going to use a budget for budgetary control, can we use the one in front of us? The budget we have here is prepared for a single level of activity. 1,000 units, £20,000. Well, the answer is no. Based on that budget, we're unable to compare budget to actual. What do we need in order to compare budget to actual? Well, we need this information here, split into its variable cost and its fixed cost. If we know the cost behaviour, we are then able to change the cost to whatever level of activity the actual results are at. And as a result, we are then able to compare one to the other, like with like. So, a fixed budget is what we've just seen, a budget prepared at a single level of activity. A flexible budget is a budget with all costs classified as fixed or variable. The budget may be prepared at a number of activity levels, and very importantly, it may be changed or flexed to the actual level of activity for budgetary control purposes. So, if we go back to example 1, if we are now told that £10,000 of budgeted costs are variable, the remainder being fixed, are we able to tell whether the company has done better or worse than expected? So, looking at the example, we're now told that 10,000 is variable cost, and the remainder, 10,000, is fixed cost. Given that we know the cost behaviour of each element here, I think we can properly look at the budgeted cost of actual output. We know the whole point about fixed cost is that it will not change. And when we look at the variable cost, what can we say about the unit variable cost? 10,000 for 1,000 units, that's £10 per unit. What we want to do is to multiply that by the actual level of activity, 1,200 units, and that gives us 12,000. So the total cost is 22,000. If we were to compare that to the actual results, 22,500, I think what we notice is that we have a 500 adverse variance. We spent more than we expected to spend. Please note, when we look at budgetary control, and in particular the flexing of budgets, this is typically done in an exam environment as part of a variance question. It doesn't have to be, but typically that is what has happened in the past.